not here last week? Okay. So there's a lot of you are not here last week. Okay. For those of you who are not here last week, do you all know me? I'm Jerry. So.
We all know you.
Okay. Okay. Since a small number of you were not here last week, let me just do a recap, okay? Just for the benefit of those who were not here last week. Just a few minutes. But before we get started, Dr. Gary asked me to come back and continue this series of investment education with all of you. So for the first 45 minutes or so, I will be handling the first half of this class. And then Dr. Gary will come back, we'll take a short break, and then he will come back and he will continue his class. Okay? So last week we were covering the stock basics. Okay? We talked about how do we look up the stocks, how do you do the trend line, the support and resistance line, right? So for those of you who don't have benefit of listening last week, support is what? Support is your ground floor. Okay? When you're standing on the ground floor, you want to stay on a solid ground, right? Your ceiling is what? It's the top of ceiling. Most likely you cannot go through that unless there's a great force to force it up. Okay? How does that relate to the real world we live in, so that you can relate to something that like the stock market? You guys heard of sinkholes, right? You know those sinkholes? It's not often in Texas, right? Mostly on the eastern state, like southeast Florida, right? So the size of those average sinkholes are between 1 meter to about 600 meters in diameter in depth. So 1 meter is about 3.3 feet to about 2,000 feet. So imagine if you are in a sinkhole, if you fell into a sinkhole, you don't know how far you're going to fall. It actually happened to a guy a couple years ago, right? His bedroom all of a sudden opened up. His whole floor fell on this sinkhole, and he screamed and yelled, and his brother from next door came and tried to get him out, but he couldn't. I mean, he just heard the voice keep fading, and then he cannot get. So you don't know how far this sinkhole is. So if you're in that situation, don't you wish you have a lifeline? Tied to your waist somewhere, right? And you can crawl yourself out. Okay. So in the stock market, when you lose your support, you don't know how far down you're going to go. So that lifeline is what we talked about last week, a stop order, right? If you have a stop order, that will kind of pull you out. If you lose only a small percentage, like 7 or 8%, you get out, at least you still have majority of your portfolio left. So that's what a support is. When you some of the stock, they most likely follow some kind of trend line, the support and resistance line, until that behavior change. And when that behavior change, you move on to other candidates. Okay? So that's primary. Last week we talked about the support and resistance line. We talked about the fundamental, the technical, and then the market tone and all of that. So the behavior of the stock price of your company is driven mostly by the market tone. Okay? So when the market is moving up, just like in the last few days, the S&P has moved up about its 200 moving average line, right? Have you guys noticed that? So everyone is happy, right? So everyone is buying again. But we don't know if there's another sinkhole happens, and it will drop you down. So this week, we'll come back to this week here. Now that you have some understanding of the stock basic, let's go into how do you find a list of actionable stocks so that you can monitor. How many of you know how many stocks are out there in the stock market, in the U.S. stock market? That's a big number, right? I just look it up. Roughly about 3,600. Okay, roughly about over 3,000 stocks. So how do you know which one to pick? Right, there's got to be some way you can you can pick it. So this is one of the way to do it. By all means, there are other ways to do it, but this is just one way. Show you an example, then all of you can look at it and say, oh, maybe I can follow that, or maybe I can tweak that system a little bit to fit your mode of operation. Okay, so everyone has a copy of the handout, right? Okay, so number one step is you register for an account at the TradeMaster. Okay, you can just register and you can follow the prompts to create an account, and you can use the tools without funding the account. Meaning that you can follow the prompts, you can create the account as if you're really going to do it, but you don't have to put money into it. If you want to, I mean, you're certainly welcome. But for me, I just like register and I can get it. I can go on and I can use the tools. Okay. And once you do that, once you're able to successfully create that account, which only takes like 5 or 10 minutes. Okay? It's not that hard to do. Once you do that, then the next step is you click on this launch trading apps on step 2. Okay? So that's pretty easy to follow, right? So once you click the trading apps, oh, by the way, there's a lot of training videos in the TradeMaster that will train you how to work their tools. Okay. Yeah, you can go into that TradeMaster and you can, because they really want to educate you, so you can trade a lot and increase that commission. Yes.
I was going to say, when you sign up, I did this a while ago because I wanted to find a free paper trading app. This actually gives you the free paper trading. So it gives you a real account that you can put money in if you want to. And it also gives you a paper trading account, and you can scroll down and you can pick the account, and that's where you actually can trade and play in here for 0. That's why it's so awesome. So,
Yeah, that was what I'm going to cover too. Yes. They actually give you a paper trading account of $100,000 you can play with. So you can see how good your stock picking or your strategy is. So that's pretty good, right?
okay.
You can, instead of like, you use a big chip tablet or your Excel spreadsheets, it will do that for you. Very simple. Okay. Thanks, Karen. So we go to page 3. Once you click that trading apps, this is kind of like in a black background, so it's not that easy to read. But I identify those steps for you so that you guys can all follow. Whenever you get set up, you click that trading apps, and you can follow the step 1, 2, 3, 4. And I make it highlighted so that you can follow which step goes to where. When step 1 is you click the markets tab, then we'll follow by step 2, go to live action, then click the down arrow key next to unusual activity, and then step 4 is my scan. This may not make a whole lot of sense to you, but when you get it set up, if you do want to get it set up, not that you have to, but if you want to educate yourself more, and whenever you get to it, you can do this way. It will help you to write your own scan. And these trading apps really have some of those ready-made scan for you already. If you don't want to use your own scan, they have many scans already. There's so many of them that really must be over 100 scans. But I just use my own custom scan.
And what do you mean by scan?
Scanning meaning that, remember I said earlier, there's around 3,600
Right.
stocks out there.
Right.
Scan is a way to filter down
Okay.
a handful of stocks.
So it's a search.
Not exactly a search, it's a filtering mechanism. You use some technical indicators, some fundamental indicators, and then you filter down those stocks into a sizable list that you can follow. Okay?
Yeah, it's hard to read this, but what this
Yes.
is it gives you all sorts of stuff like it's trading at its 52-week high, its 52-week low.
Yeah, it's a lot.
There's all kinds of stuff. Some of them,
Right.
like Jack's saying, are technical. Some are market tone
Like
type
growth,
things. Some
like,
of them are
yeah,
head and shoulder formations,
yeah,
some are
that's a lot.
double bottoms. I mean, it's all kinds of stuff.
Right.
But it helps you boil that big list down into a
Right.
handful.
Yeah.
And it'll send you an email and tell you that here's your stocks.
Yeah. Yeah. I mean, you can really spend days on it if you really are interested. But I just make it simple for all of you, so at least you can get started. And so if you look at step 4, not step 4, but number 4, the 4th item on my page 2. I said create a list of custom criteria to narrow down the stock list. Those are the 4 criteria that I use. Again, you can use whatever criteria that fits you, depending on what guru you follow, what books you read, and all that. But for me, I just, for illustration purposes, I use those 4. Okay, like earnings per share, 5-year growth rate greater than 75%. So what's earnings per share mean? What's that? In simple English, what does that mean? It's really measure the profitability of the company, like how much earning this company can bring per share of outstanding stocks. Okay. So this really measures like the growth. How healthy is this company? Not just a 1-year company, but over 5 years. What's the average growth rate? So I put down like 75%. Must be greater than 75%. So out of this universe of 3,600 stocks, then it will filter down to a sizable number. In my case, when I do the first scan, it comes up like 52, 52 or 53. Okay, that's good, from 3,600 to 52.
Yeah.
Is that wow? Okay. And then number 2 is average trading volume greater than 500,000 shares. What's so magic about 500,000 shares? Because if the company is not traded that much, it could be manipulated by some market maker or by some big shareholders and try to manipulate the, the small pool of stocks. So 500,000 is the minimum. I said, okay, 500,000 shares. Price to earning ratio less than S&P 500 PE ratio. So what's price to earning ratio mean? So you guys know the earning is measure the profitability of a company, how much earning a company bring in from the business. Price to earning. So price to earning is really how much people will pay for this stock per dollar of earning. Okay. So, like for example, I look up the PE ratio of S&P 500, which really measures the 500 largest company in the U.S. stock market. And the average PE ratio is 18.8. So if I want the stock list to be, the ratio is less than that, what am I searching for? Yes, Karen?
You're looking for bargains.
Yes, exactly. I'm looking for a bargain. I'm looking for people that may not have realized that this stock is selling at average. I'm looking at the bargain price, meaning that when you go to the mall, right? You're looking for things on sale, 10% off, 50% off, buy one get one free. Kind of opens your eyes. Wow, it's like that. Okay, same concept. And then the last criteria I use the relative price strength 5-year growth greater than 40%. What's the relative price strength mean?
Stability?
Stability, yeah. The demand, okay, the demand of the stock. So if it's greater, I pick 40% because I tried 75%. Oh, it didn't give me that much. I mean, give me 0. So okay, then I drop it down until I get like 40. Okay, 40% gives me 3 stocks. I said okay, I can handle 3. So there's nothing magic about it. You just play with your percentage until you get to a sizable number of stocks that you can monitor, you can look at. Okay?
But they don't have to have all 4 of these.
No,
They're separate.
it,
You consider it separate.
no, it starts from the first one. It starts from the earnings per share, then it drops down to next layer, it drops down next layer, and then when it drops down to the fourth, the relative price strength is 53. So the first criteria just be like 53, yeah, 52. The second criteria from the 53 stocks, after they've gone through the 500 shares of average volume, it gives me like 22. The number 3 criteria give me 8. The number 4 criteria give me 3. That's manageable. Now, is that a good thing to have 3 stocks? 3 stocks you want to buy? No, I'm not saying that. What I mean by actionable stock is something that you can start looking at, something that you can start playing with, start monitoring, what have you. Okay, so my bottom note here is that you can create your own set of criterions to narrow down your stock list to a manageable size for monitoring. So really, that's just what it is. So if you turn to the next page, so the result of this is show up here. I kind of capture the box so you can see clearly at the top. Like earnings 5-year growth rate is greater than 75%. Average volume is 5. It says 50,000, but it's really 500. Somehow when I do a screen capture, it is 500,000. And PE ratio is 18.81, less than 18.81. I'm looking for a bargain. Relative price strength, 5-year growth rate is greater than 40%. Okay. Any questions on this? Any questions on the criteria? Yes, sir.
I haven't used Trade Monster, but is the 5-year growth rate year over year or cumulative?
I think it's the average. Yeah. Good question. Good question. So once I have those 3 stocks, then you can do all kinds of stuff with it. Okay. So my scan created a search list of those 3 stocks. I don't even know how to say that. Ubiquity networks. Okay. This is a networking company in Sunnyvale, California. Okay. So another one is the Francesca Holding Corporation. I believe they provide some business services to the companies, and the water investment management. I didn't look that up, but this is some kind of holding company for some investment. So what I did is, I turned the page, I said which one is a good candidate. This is not that easy to read. But the concept is you can click that stock symbol. Once you're in that search result, you can click that ticker symbol, and then you can see the stock chart. What I'm showing here, this is the 1-year stock chart, and you can go down to like 6 months, 3 months, 2 months, 1 month, 5 days, and what have you. But I always like to start with a 1-year chart because it gives me an idea on the behavior, the performance of this stock over a 1-year period. Okay, so that's what I did. I started with the 1-year chart. And I draw the support and resistance line. Remember what I said about the support and resistance line? The trend line is more, drawing that is like an art instead of a science, because the way I draw it may be a little different from the guy next to me. Remember last week how many points it takes to draw a trend line? 3, right. It takes 2 to draw a line, 3 to make a trend, right? So I connect as best I can, and I come up with the support and resistance for this stock. So this stock looks like it's bouncing, around the support and resistance line. A couple times they try to break open that resistance line. So the question is, would you trade this stock?
Yeah,
Yes?
it's not straight back up.
Okay.
You wanna catch it on the bottom and.
You want to catch it at the bottom, yeah, you don't
It's
want to
pretty
catch it
close
at
to
the
the
top.
bottom.
Yes.
It looks like it's trending up.
Yeah, well, that would be the expectation,
Mhm.
given because it's got a nice roll in.
Right, right. So is that's your general consensus?
I have to test. I have to test that.
Well, exactly, that's why you want your paper traders,
Yeah.
right?
Oh, yes, yeah.
That's why you want paper traders. Another way to do it, like, you write a scan, right? You write a scan and said, okay, this is a stock, good stock to invest, whatever, performance you're expecting. Expecting a 40% return in a 7-day period or whatever scan and you have to be very specific about your scan, right? If you're not specific, it'll give you a different answer.
Right.
So you cannot just say, well, show me a stock that will make me money. Okay, I mean, yeah, it will make you money, but it may take 10 years for this stock to go up to make you money. But if you want to say, hey, I want to make money in the next 30 days. Okay, so that's why paper trading will help you to confirm the way you're doing it is really can make you money. Okay. So the second stock, this stock is the Francesca, FRAN. So I draw the support and resistance line. Looks like this is the downtrending stock. And would you trade this stock? No, you would not want to trade this stock. It's pretty obvious. Yes, sir.
Well, I mean, there's a difference between trading a stock and investing in a stock.
That's true. That's true.
To me, this is a great stock to trade.
Oh, okay.
I mean, it's got a defined
Depending
direction.
on what strategy you use, right? Yeah, yeah. Okay. Jeff bring up a very good point. What's the difference between investing and trading?
Trade short term.
Been in and out.
Investment long term.
Trading is in and out, right? Trading is in and out. Investing is what?
Long.
Long term,
Yeah, so.
preserving your principal. Yes,
So I have a question on the
Yeah.
second one.
yes,
Looking at the support line,
right.
when you're looking at the first point on that, you're looking at the peak of that little blurb,
Right.
not the low point of that little blurb. So why would that have been drawn to the peak as opposed through?
Oh, when I draw that line, I start from the left, I mean from the right, sorry. From the right,
Oh, I see, okay.
because right is the current,
Okay, so you always start from the right out,
Right.
over. Okay,
Yeah.
that
Right.
makes a huge difference.
yeah, yeah,
Okay,
right.
thank you.
Because you're trying to use the trend line to what? To predict,
Okay, that makes sense.
to predict your future. Why is the support and resistance line so important? Because everyone, I don't want to say everyone, but most of the professionals use that. That's why when you look at the S&P, the market index, when it drops below the 200-day moving average, everyone panicking. Everyone is talking about, oh my gosh, it dropped that 200-day moving average because that is a major milestone. Whenever you break that support, you don't know how far it's going to go. When it breaks that line, people is going to look for where is the next support? Where's the next previous support? Where is the next previous low?
That makes sense.
Okay. Remember the sinkhole example, right? When it drops, you want to what? You want to crawl back up to the next hand grip or some kind of area you can grab on hold and you want to climb out of the hole. Okay. Questions? It's a pretty simple stuff. Yes, yeah.
Just a comment on the trend lines that you're drawing.
Yes.
I mean, what you didn't do here, but what you can do is you can continue these out in the future, which is a form of giving you some sort of prediction.
Yes, yeah, definitely. There are many, Jeff talking about using different indicators, like there are different indicators called, you got heard of Fibonacci numbers?
Yeah.
And another one is the Elliott wave. Okay. How many of you heard those terms before? Wow.
They're like sine waves, they're like patterns, mathematical patterns, is that what you're telling me?
Yeah, Elliott wave, you can look up the history of Elliott wave.
It's not.
Elliott wave is developed by a guy,
Elliott, right?
Elliott. There you go. When you come up with your own indicator, you said, come up with your
Get to name it, right?
Sharon's indicator, right?
Yeah.
Or whatever, you know, Mom indicator, right? They name after you, right? Okay.
Get to be famous.
But Elliott wave is, he's saying that there's 5 waves in a movement of a star.
Oh, okay.
Okay.
He's
And-
specific to star.
Right. And then if you're able to label them, if you're able to identify correctly, then you can see, oh, okay, it's pulling back, then it's time to get in or get out or whatever.
That's it.
And there are indicators that you can put down there, and you can predict and say, oh, okay, I'm in wave 3 and I still have another leg to go on wave 4. Because wave 1 is going up, wave 2 is retracing, and wave 3 is going up, and then wave 4 and 5 you don't want to get in, and then start. It may drop again, and then it start the 5 wave again. Okay. Yes, Karen.
I was just gonna make a point on Jeff's point on this second one, on this Francesca one that's down at the bottom. This is actually probably a pretty good example of where the price earnings ratio, which one? The price to
Yeah,
earnings
the
ratio.
ratio,
This is probably one where the stock price is low, probably relative to the earnings of this company, because sometimes, the stock price has nothing to do with the actual earnings of the company. And so this is probably why the stock came up, because it's probably a good deal right now, because it's going down, so you might probably wanna watch this to get in,
Right.
because of that indicator, perhaps for investing purposes, to
Very
hold
true.
for a while.
Very
So,
true. Yeah.
that's just an example of how the price earnings can work.
Very true, because I know some companies, they're cash rich right now, meaning they got a lot of cash. What they do is that they want to bump up the earnings per share. What they do is that they buy back their shares. They buy back their shares so that there's less number of shares outstanding. Then it will drive up the earnings per share, but the company really, the earnings pretty just flat. But because there's less shares out there, it looks like the earnings per share going up, but it's not. Yes.
So is there any way to kind of predict if there's gonna be a split? Because sometimes the stocks are then, the company splits them.
Right.
And is there any way to, good or bad, to watch out for something like that?
Well, there's a lot of rumors out there.
Yeah.
You can,
Be an insider.
yeah, insider, yeah.
As long as they've
You
got,
can,
yeah, stock sharing
insider.
options for the employees, otherwise.
Be a stock split consultant.
Yeah.
Then you would know.
It does have to do with the
there-
price.
Yeah, there are
I
other
mean, once
ways,
it gets to a certain
Right.
price, they
Yeah.
might choose to split it, it'll bring the
Not-
price
not
down again,
necessarily
but
like-
yeah.
But
Okay,
it's
look
still,
at-
it's just it's the same way, just a different way to divvy up a pie. So,
Right.
I mean, if it's, cut in half, it's still the same size pie. If it's cut in 12 pieces, it's still the same size pie.
Right.
So
Yeah.
it doesn't
Same
really
value.
But it's
affect the
expected,
value of the company.
but it does drive demand.
It can, like
It can.
Apple,
Yeah,
they
it
brought
can.
down Apple to a price where more of the consumer.
Regular
can afford it.
people.
Right.
yeah, like Warren Buffett stock, okay, costs like $200,000 a share.
Yeah.
Okay, how many shares can you buy?
But they do let you buy, I think, like about 100 of the shares.
Oh, okay, block off 100, right? 200,000.
Wow, 1 billion.
All right.
Had you
Right.
100.
To answer your question, to answer your question,
Sorry.
I know what some analysts do with that is they look at the makeup of the company's business units. Okay, some companies worth more when they break up the companies, and then they publicly list all those individual pieces, and it will worth more than as a whole. For example, one example that I can remember is like Yahoo. Okay, I don't know what Yahoo is trading right now, but Yahoo owns, I forgot how many percent share of that search engine company in China. It just went public. Alibaba, yeah, Alibaba. Because somehow one of the co-founder of Yahoo have some insight. He probably did something right, with Yahoo. He funded the Alibaba in its early stage with like $500,000 or $1 million, and Alibaba agreed to give them so many shares of stock, and it will give them like so many percent ownership, and they still own that. So, I mean, Yahoo isn't worth that much, but if you break up that, the piece that they own is that wow, it's worth more. The piece they own on that Alibaba share worth more than whatever Yahoo's earning is. Okay. Yes, sir.
I have a question. In terms of, this is looking at it from an intellectual point of view, in terms of how to pick the stocks, how to do that. At what point do we incorporate Gary's method? I mean, because you
Very
could
good
have,
point.
instead of actually
Yes.
doing it, you could incorporate that at every step instead of using the computer.
Very good.
But at what point and how much do I really need to know?
You
Right.
gotta narrow it down though.
Very good
Because you
point.
don't wanna be testing 20 stocks, you wanna sit there and make a
Yeah.
statement. So you've narrowed it
Yeah.
down to some that have a pattern that would be predictable.
Yeah. For example, let me use my case for example, right? I use 4 criteria. Okay. I use 4 criteria. I use earnings per share. I use the volumes. I use the price to earning ratios. I use the relative price strength. I could rearrange the orders and I'll get a different set of results. Right? I can put the relative price strength first. Okay. So the question is, you need to write a scan. Show me,
The order of,
the order of priority
okay.
in order to help me to identify a list of tradable, actionable stock that will return X% of profit
Okay.
in
So you do it
X
at,
number of days.
you try to use it at every step, but you're using technology at the same time.
Right.
It's not like you're just doing everything.
Right.
on fly.
Right. Because if you write a scan set, show me out of this 3,600 stocks,
Which one?
which 5 that I should look at? So, wow, you do a lot of scanning. 3,600 is a lot. But if you have a way to indicators, okay, then you can come down to a handful.
That are more likely.
Right.
Then you can check those.
Then you can check those, and then once you have a handful of stocks, then you can look at the technical, the charting, and say, oh, it's just bouncing off the support. It's time to get in.
And I know there's a lot of different options.
Yes.
What options should you recommend to focus on?
What option?
The filters.
Filters.
The
No, in options that, when you trade,
Trading options?
yeah.
Trading options? Oh, okay, we haven't get into
Oh,
that yet.
okay, all right.
Yeah.
Let's not
Okay.
go there.
Yeah. If people want to learn about options, I could get into it in a future class.
Okay.
But since everyone is a different level of knowledge here, I don't want to jump too advanced into options. But definitely, option is a good way to trade because you can leverage. But you have to know what you're doing because buying options, if you let it expire, it's go worth nothing. You all know what option is? Okay, let me put simply in today's term that we can on. You guys all purchased house before, or know the home buying transaction? Like when you look at a list of homes and you like one that you're going to buy. First step is what? You want to put down some earnest money, right? Depending on how the seller want to, how serious it is. But let's say you're very serious as a buyer, you put down like $5,000. I agreed to buy your home at $200,000, let's say. 90 days from now. And I'm giving you $5,000 earnest money. So in 90 days, I can what? I can exercise my option. I can use my $5,000 earnest money. That's my deposit, right? So within this 90 days, I can purchase this home for $200,000. What if this home, during this 90 days, what if this home gone up to like $250,000?
You still have it.
I can still get it for $200,000, but I only deposit how much money? $5,000. So I could, if I want to, sell this home to somebody to $250,000, or sell this option. Let's say because I haven't purchased the home yet, but I could sell the option to somebody so they can purchase this home for $250,000, because that's what the market is. That's what the market price of this $250,000 home. But I hold this option to purchase this house, let's say 3 months ago. But I only spent what, $5,000. Okay, another example. Let's say 3 months already gone by and this house dropped by 50,000, 150,000. I said, well, do you want to purchase this home for $200,000 because that's what you agreed to buy, but the house really worth $150,000 right now? Would you want to buy this home?
It has a sinkhole, right?
Yeah, $50,000 sinkhole now.
So you'd
Got a
rather,
tire lifeline now.
so you'd rather lose the 5,000 than lose 50,000, basically.
Yes. I know that's an extreme example, but I just want to illustrate it to you. Okay? But let's say you don't act. Let's say you just put down this $5,000 and you just sit there and watch.
You lost it. You gave it.
And you didn't realize that 90 days has passed, 3 months, right? 90 days have passed. What happened to your $5,000 earnest money? You didn't act. You didn't go
You
back to
were
the
smiling.
the buyer. I mean, right? What happened to your $5,000? You lose your $5,000. So your options is like that, right? So that's really the basic, the gist of understanding of this option, of the stock option. Yes, sir.
Back to the filters to scan for.
Yes, sir.
I think a really important one, I think I don't know what it would be called up here, but it's an ATR, which is average trading range.
Okay.
If you want a stock that moves,
Right.
and there's a lot of stocks like Microsoft or
Yes.
Intel that,
Right.
that really don't, they have,
Right.
their P&E ratio or whatever is gonna be great.
That's
They don't
true.
move much.
That's true.
So I think that would be something that you wanna look for, some stocks that move.
Yeah.
Average trading range?
I think
I think it's
the relative price strength
Range, thank you.
would capture that concept. But you could definitely put in that indicator.
Because it tells you, like, let's say a stock, like Google probably moves $5 a day.
Yeah.
Microsoft probably moves 30 cents a day, average.
Right. Yeah. Very good. Very
So
good
what
point.
is a good number? So what would you, like if you're doing
That's,
average trading
you know,
range should
you
be
just have to work
greater
it.
than or
Yeah.
less than? And
Again, you can read books or you can try. You can go in and look at different indicators, and you can write a scan. Let's say I like this, like Jeff said, I like the average trading volume. Maybe that's the most important one. That may be my number one. Earnings per share over 5-year growth, that may be my number 2. You write a scan and see which one's my number 1, number 2, number 3, number 4. Yes, sir.
Could you explain that sound? I'm at the old rail. If you're gonna say one of these stocks, how would you give an example of how you would trade this, maybe as a day trader or a week, and then could we compare, say, maybe Jeff, if he
Right.
says, hey, this might be good, how Jeff would do it, if you do it
Right.
in a day,
Right.
or what house he would do it.
Oh, okay. If I'm interested in this stock, okay, let's say this stock, I know, looks like from my trend line, the support is the $31. But I'm also interested to purchase this when it bounces off from the support, right? Remember last week I talked about the price and volume relationship, right? So even though the price may be moving up, but I want to look at volume. Okay? Remember what I said last week? If the price is moving higher but the volume is below average, what does that tell you? Amateurs are buying, exactly, Amy, remember that. Amateurs are buying. Do you want to get in? The big boys have not jumped in yet. So you may want to wait until the volume picks up, meaning the big boys are going in, before you act on it. Because if you're going too soon, you may get into another sinkhole. Okay? But let's say it bounces off the support line and the volume is pretty like above average. It's like, wow, you know, and it has a couple of days of moving up. And I also look at the market. I mean, is the market really, really strong? Or are we in a sideways market right now? You know, so.
And then would you get in and out in the same day, or how long would you hold something?
Depending on your expectation. Do you want to just make 5–10%, or do you want to make 80% profit in a 7-day, or depending on your
I'll take either one of those.
Right.
how greedy you are, or how fearful you are, right? Remember, you're fighting the two emotions, right? When you get into a position, you want to make as much money as possible, but also you're pretty fearful too, right? So you really have to develop a system that works in favor of your personality.